In our last video, we showcased a staggering buy signal that delivered a 3,162-point move on the US30 index, generated using our Trailblazer Scalper Indicator, an epic non-repaint tool suitable for scalping, day trading, and swing trading. Our chic strategy entry option 3 offered a sniper entry with a move that emerged from a strong key zone of confluence, having extended up to the high that formed on December 12 as marked here on the daily chart. Following this, the market entered a decline, where we currently hold an active sell trade which is already running in profit. This short trade was initiated on December 16, after observing a series of lower highs and lower lows forming on the H1 timeframe as shown here. You can also see the 1700 hours entry bar marked here, with the position taken on the basis of a sell signal triggered on the 5-minute timeframe. A signal that came in at 1555 as marked. With a corresponding short entry at 1700 hours that was delayed but remained valid, given the ample room between the entry level and a higher timeframe key zone of confluence, where the trade is expected to be exited. We will continue tracking this downward move as further market decline is anticipated. Be sure to always incorporate stop-loss placement in conjunction with proper risk management in your trades. These aspects of trading have not yet been covered in our videos, as we are currently focusing on the inner workings of the indicator and its performance in one of the most challenging markets. The market continued to decline as it approached a turncoat belt identified on the higher time frames. With the substantial yield seen here in the terminal, securing these gains will serve us well in preempting the risk of relinquishing hard-earned profit to the unforgiving market. Switching to the H1 chart, you can clearly see the market reaching the hourly timeframe structure levels, where a potential price reaction may be expected. If you're finding value in this content, subscribe to the channel, turn on the notification bell, like, share, and leave your thoughts in the comments. Moments later, sell trade exited. Price action unfolds in the green shaded area, where the market is reacting within this higher timeframe key zone as anticipated. A buy signal then triggers at 22:10, initiating an active long entry that capitalizes on the initial upward drive, with the view to exiting at the structure levels that overlap the price gap displayed above. Chic strategy entry option 3, a retracement-based buy setup may then be anticipated, offering a potential entry that could propel price higher into a premium zone, from where the downward move may resume. Check out our previous videos on this powerful indicator to gain deeper insights into the applicable entry options. The initial upward drive unfolded as expected, reaching the overlap belt, after breaching the last swing high, signaling the likelihood of a pullback. It is important to note that trade entry considerations are always made on a case-by-case basis, subject to the various factors outlined in our previous videos, one of which is risk-reward ratio evaluation. Now, we can also see substantial gains at the current price levels, making this an opportune point to secure profits. Moments later, we see an 86% retracement of the prior move by 2:05 on December 17, following liquidity purges within this discount zone. This is where our chic strategy entry option 3 kicks in, a sniper buy entry opportunity worth catching. This sell signal that fired at 2 o'clock after the market reopened, should be viewed as one that delivers a move intended only to drive price into a discount zone, where having now met the buy setup criteria, we should then be positioned for long trades. Let's now examine these signals and annotate the moves accordingly. Following this 86% retracement into the price gap observed at 2:05 on December 17, you can see the valid buy trade entries from the Asian and London sessions already running in profit. We can expect a continued rally into a higher timeframe key zone within a premium area, where these trades may be closed, ahead of the potential resumption of the downward move. Note how this buy signal also offers a long trade opportunity. You can see all buy signal trades have now been exited, and 2 active sell positions currently running in profit, with these entries made after price reached the higher time frame key zone of confluence, just as anticipated. Moments later, we see a breach of the previous day's low as the market once again approaches key structural levels. Drilling down to the 5-minute time frame, we see the sell signal on which the trades were based, triggered at 17:30 within a higher timeframe key zone. This aligned with the key factors outlined on the red board above, which justified the active short entries that have so far yielded impressive gains as shown in the trade terminal. Moments later, we can see how price reaches the higher timeframe lower key zone and pulls back, after breaching the previous lows, indicating that further downside may still be likely as the market reopens. This leads us into the Asian session, where we can now close the trades to secure profits while monitoring price action for the next phase of the market. Back on the H1 chart, we observed a further decline on December 18th, with price running the previous day's low as well as the low formed on December 11th, having found support within the turncoat belt shown here. This reaction signaled a potential turning point, creating conditions where long setups were explored, resulting in these active buy entries which are already running in profit. Note how the initial buy signal that triggered at 9:15 set the tone for subsequent long re-entry opportunities, having already delivered impressive gains, with further upside expected, until price reaches a higher timeframe key zone of confluence, right within the premium area. With price now approaching a higher timeframe opposing key zone, it is prudent to secure these massive gains and avoid giving back the hard-earned profits to the unforgiving market. We will still remain poised to capitalize on any re-entry opportunities that may emerge, aiming to extract additional upside, ahead of the anticipated resumption of the downward move. We see a further rally beyond the proximal level of the opposing key zone and a subsequent pullback, where we could make a sniper buy entry, if price retraces into the overlapping price gap discount zone. There we go, price finally reaches the overlapping price gap discount zone, where we can now confidently make a buy re-entry with precision, fully in line with our strategy. We can then expect a market rally that is likely to purge the liquidity resting above the New York range high, before lower prices begin to unfold. Moments later, the buy entry is running in profit, providing solid confirmation of our read. We then see a second bullish leg that takes out the New York range high, just as anticipated, delivering massive gains. With this objective met, the long position will now be exited, while monitoring price action for the next phase of the market. Updating the buy signal move, we can see it delivered a whopping 528 points with a drawdown of just 12 points. For the trained eye, this is clearly an A+ setup for a short sell, which we now enter ahead of the anticipated sell signal, that is the red sheiks. A position taken to help you identify these fertile opportunities early, and validate trade signals as they are triggered. Solid confirmation of your analysis then becomes evident, once the move unfolds precisely as projected, reinforcing a rinse and repeat approach to navigating the market until this process becomes second nature. There we go, note the anticipated sell signal that fires at 19:05, and the substantial gains that unfold even before the signal triggers. This underscores the importance of being armed with a sound narrative, well grounded in a top-down market analysis. Moments later, the market plummets, taking out the liquidity resting below the New York range low. A further decline brings the market into a price gap and higher timeframe key zone overlap, where locking in profits becomes the prudent move for an astute trader. The ultimate move aims to print a lower low by running the Asian range low. We can now expect a pullback into a premium zone before lower prices begin to unfold. Our strategy consistently provides high-probability re-entry opportunities worth capitalizing on, as showcased in the earlier segments of this video. Now, the red board displayed here clearly outlines the sell setup and provides the justification for a short trade entry, the details of which you may want to review to shed more light on the applicable techniques. Following the closure of the original sell trade, the market retraces into a price gap within a higher timeframe key zone of confluence, an ideal premium zone for short sell re-entries. Although slightly delayed, 3 active sell positions are already running in profit, showcasing the effectiveness of this approach. Fast forward to December 19th, the market eventually prints a lower low, having swept the liquidity resting below the previous day's Asian range low, just as anticipated. What follows is a rally, where we continue to see soaring prices at this phase of the market. Overall, this is how to approach the charts, armed with a strategy that is modeled on repeatable market behavior, with signatures and footprints that once seen, cannot be unseen. Patterns that play out, time and time again across trading sessions each day. Be sure to check out the channel pages to watch our debut video and all previous content on this indicator, where we break down the techniques in greater detail, outlining the different applicable trade entry options using the Sheik's strategy. Thanks for watching. If you found this content insightful, smash the like button, comment and share this video with others. Subscribe to this channel and turn on notifications so you never miss our latest content. Explore more videos on the channel for deeper insights. See you in the next one.